What's up, everybody? GenExDividendInvestor here. In this video, I'm going to tell you about the most secretive and successful fund in history, one that turned its middle-aged mathematician founder into a multi-billionaire. So if you enjoy videos like this, then please hit the thumbs up button, subscribe if you haven't yet, and click that bell notification. And huge news, M1 Brokerage has just increased their referral program to $50. I'm not sure how long this will last, but if you don't have an M1 brokerage account, then the way it works is you click on my M1 referral link in the description of this video, and then either open a brokerage account and fund it with $100, or open a retirement account and fund it with $500, deposits which need to happen within 30 days of you opening the account. Then you need to keep your initial deposit inside the new account for 30 days from the date of deposit to get the free $50. You want to grow your wealth? Don't leave free money on the ground. Okay, now I'm going to tell you about the Medallion Fund, a fund that has Wall Street experts scratching their heads at its amazing 66% per year average annualized return over multiple decades, an amount that far outperforms everyone out there, doing way better than Warren Buffett and Charlie Munger's Berkshire Hathaway, which has had about 20% annualized return since 1965, and better than Peter Lynch's famed Magellan Fund, which produced an amazing 29% annualized return over his 13-year period of managing it. In fact, the fund I'll be talking about in this video has done better than both famed investors George Soros and Ray Dalio. Here's a visual comparison I found showing the returns of the Medallion Fund in black as compared to the S&P 500 in blue. It's pretty amazing to see that some of the Medallion's best years were when the S&P 500 dropped the most. In fact, I read that in March of 2020, when the pandemic crash hit the markets, the Medallion Fund made about 10%. Compare that to the S&P 500, which fell over 20%. I found this chart from a Twitter user named Charlie Balello, who documented what the best performing asset classes were over the last 10 years. We see that Bitcoin has had the best annualized return at 230% a year, which is mind-boggling. And we see that the NASDAQ 100 has returned an incredible 20% annualized return, and then we see SPY has returned 14% annually, which is still awesome. Of course, 10 years is a relatively short time frame from an investing perspective, so it'll be fun to see how Bitcoin holds up over 30 to 40 years. If we look at specific stocks, we find that Amazon has been the best performing stock of all times in terms of annualized returns over 20 years, as it has had a 37% annualized return since inception in 1997. Amazon's split adjusted price was under $2 a share in 1997, and today is over $3,700 a share, which means it's gained 215,000% all time, which translates into 37% annualized. Another company which should be mentioned in terms of best all-around returns is Coca-Cola, which has had over 1,000,000% return over its lifetime, but that goes back around 100 years. Yet another stock considered as one of the most successful of all time is Altria, and this shows you that had you invested $1 in 1968 into Altria, it would now be worth about $6,600. Whereas $1 in the S&P 500 back then would be worth about $87 now. I tell you all of this so you can understand how massive 66% a year is for over 30 years for the Medallion Fund. The Medallion Fund not only has the highest returns, but it's also known for having the highest fees in the world. So its 66% average return per year is lowered to 39% after fees from 1988 to 2018, which was the time frame it was analyzed. This fund is still doing crazy well, as in 2020 it had a 76% return as compared to the S&P 500, which had a 16% return. And the first quarter of 2021 it had a 10% return as compared to the 7% of the S&P 500. So the private hedge fund Medallion, which is no longer open to the public, was founded by the elusive award-winning mathematician Jim Simons, who's been called the best money manager on earth because of his out-of-the-world sustained results. Some say that Jim Simons started the quant revolution on Wall Street. Quants use massive amounts of data to try to predict what the market or specific stocks are going to do, and big data combined with predictive and evolving algorithms is a bit like what machine learning is today. Jim Simons is a private multi-billionaire in his 80s who got his undergrad mathematics degree from MIT and then got his PhD in math from Berkeley at only age 20, and later he taught math at MIT and at Harvard and other colleges. After college, he was recruited to join the code-breaking spying arm of the NSA in the 1960s. And his cryptography algorithms help break codes and track potential military threats. But he decided he would quit all of that and try his hand at the financial markets, even though people told him he was utterly unqualified to do it. And of course, many of his math colleagues were both astonished and annoyed with his plan. He founded Renaissance Technologies at age 44, a financial technology hedge fund company specialized in systematic trading using quantitative models derived from mathematical and statistical analysis. What Renaissance tech does is they find small market anomalies and inefficiencies and then exploit them to enable profitable trading on billions of dollars of capital. They build mathematical models and then they do rapid-fire buying and selling of US and overseas futures contracts, commodities, mortgage derivatives, and other financial products. This year, Renaissance Tech's Medallion Fund made a ton of money in the volatile oil futures market. Jim Simons is quoted as saying, "We searched through historical data looking for anomalous patterns that we would not expect to occur at random." Another key statement he made was that past performance is the best predictor of success. Remember that one because the classic warning is that you can't guarantee an investment will continue to do well in the future simply because it's done well in the past. It's still the best predictor, this guy says. Simons said, "We have 3 criteria. Number 1 if it's publicly traded, number 2 if it's liquid, and number 3 if it's amenable to modeling. Then they trade it." He also said, "Efficient market theory is correct in that there are no gross inefficiencies. But we look at anomalies that may be small in size and brief in time. We make our forecast. Then, shortly thereafter, we reevaluate the situation and revise our forecast on our portfolio. We do this all day long. We're always in and out and out and in. So we're dependent on activity to make money." According to an author who studied the Medallion Fund and then wrote a book called The Man Who Solved the Market, he said that Medallion Strategy involves holding thousands of short-term positions, both long and short, at any given time. The fund makes high-frequency trades, but has also held positions for 1 or 2 weeks. He interviewed one of the executives at Renaissance who allegedly told a friend that Medallion was right about 51% of the time on millions of trades, and that they have made billions that way. So what it has done is kind of like what a casino does, which is to win a little on a lot of hands, though casinos literally have the odds slightly in their favor. The author estimated that in 31 years, Medallion would have turned a $100 investment into a $400 million fortune. I guess Einstein was right when he said compounding is the 8th wonder of the world. But that being said, the first 3 years that Jim Simons started out with his algorithms and trading yielded poor results, and he lost almost all of the money that was invested in him, and he ultimately got depressed for feeling like a failure. But instead of giving up, he worked even harder to find useful ways to read data and turn it into profitable trades. He kept evolving his algorithms and hiring smart people from diverse backgrounds. And then he started winning. His fund grew from $20 million in the 80s to multiple billions in 2000, and then to $10 billion in 2010. From 1994 to 2015, it had over a 70% average annualized return before their fees. One interesting thing he did was to pay huge distributions to his investors rather than keep investing at the principal, like most hedge funds do. So the Medallion Fund's under management stayed at about $10 billion, even though it was making such huge returns. People on the outside surmised that it was necessary to keep his fund capped at $10 billion in order for his private trading algorithms to work properly, i.e. that the amounts of money needed to succeed couldn't get too large, which is probably also why he closed off Medallion to the public, as more capital would have hurt its secret sauce. That being said, he actually has 2 public funds which are open to outside investors, but they have underperformed. I'm talking about the Renaissance Institutional Equities Fund, aka RIEF, and the Renaissance Institutional Diversified Alpha, aka RIDA. No one fully understands, though, why Medallion has done so well and its public ones have not, other than lots of guesses. For reference, his company Renaissance Technologies has 140 companies, a third of which have PhDs in fields like astrophysics, number theory, computational linguistics, and other areas. What they have very little of are finance types, as they only have 2 Wall Street veterans in their ranks. I read that most employees love working for him, and he frequently takes all of his staff and their families on lavish vacations, like he recently flew everyone that worked for him and their families to Bermuda. But, like everyone out there, his life hasn't been without its challenges. His company's had investigations into tax evasion. He had a divorce. One of his sons unfortunately died when riding a bicycle and he got hit by a car. Another of his sons drowned while on vacation in Indonesia. That all reminds me of the Regina Brett quote that says, "If we all threw our problems in a pile and saw everyone else's, we'd grab ours back." Anyways, Simons named his fund Medallion after the Veblen Math Prize he won, a prestigious mathematics award that is only given out once every few years. His work was on the esoteric field of differential geometry. So Mr. Simons kinda reminds me of that guy Matt Damon played in Good Will Hunting, only he's uber rich. In 2019, his net worth was estimated by Forbes to be over $20 billion, which ranked him 23rd on the list of wealthiest Americans. However, he was also ranked number 1 on the list for the highest earning hedge fund managers. But Jim Simons was also one of the people who was recently outed as having one of the largest hidden trust funds in the world, according to the Paradise Papers. which was a massive cyber leak of documents of people who had hidden offshore investments. Thus, it is thought he has substantially more money than the 20 billion that is known. Amazing. Now, to be clear, you can find smaller periods of time where different funds and fund managers have outperformed. But when you start looking over multiple decades, then the people who have beaten the market shrinks dramatically, making Jim Simon's Medallion Fund all the more incredible. I hope you enjoyed all that. If you like me mixing up my videos to include stuff like this, then tell me in the comments below. Please hit the thumbs up button, subscribe if you haven't yet, and click that bell notification. Now I'd like to shout out my latest Patreon aristocrat who has recently signed up. So thank you, Joe Rod. As an aristocrat, he gains access to my dividend portfolio tracker spreadsheet and to multiple private channels on my Discord, including one where I let people watch my videos before I release them to the public, as well as I often let you vote on which thumbnails I use in my videos. Finally, I highly recommend that you join my free dividend Discord chat server, which has thousands of dividend investors on it from around the world, and is growing all the time. Thanks for watching, stay positive, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.